The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon to 1 p.m. Eastern Time on this last day of November, November the 30th. And what's really interesting about this is that we're closing out the November candle, and I'm going to try to make this as clear as I can, if I can just, I never thought of it until this very second, so give me one moment here. I want to go to, move this away. I want to go to the charts. Oh, it's being covered. That's why I can't see it. There it is. I want to go to the chart that shows. Oh, I lost it again. Oh, I didn't realize that. It can, if I get too many charts, it knocks off one of them. Pity. Okay, let's just move along. I'll find it in a moment and I'll get it to you. In the Chapman Wave methodology, we're always looking for the lowest, most identifiable low bar, starting a Chapman Wave count to the upside. The buy signal starts with a turnaround, usually with the price and the stochastic and the MACD turning up, but only when you get a buy mode does it say we should get, in the methodology that I like to teach, we should get at least 4 higher peaks going to a D, and I alphabetize them uppercase A, B, C, D. You can still go to E, F, and G, but D is really where other things can happen. We've seen it so many times. Look what happened. The E-mini recycled, went to that D at 25.94.60. This is the December contract, and that's where we had that pullback from the 25.90s down to the 25.50s, and then started new buy mode. For subscribers, we have a particular position in the Dow that goes back to the 22,290s in the DIA, and we added to that about 4 days ago. This is a week ago. We added to that, and it's, of course, just been a very good push to the upside. Now, let's look at this. This is now leg C. Let's go through the daily chart on the left side. This is leg C. In the middle is the weekly chart, F/C in the E-mini. And here's the 120-minute chart, G/C, with a technical spiraling higher, going above resistance, and at all-time highs, of course, at 2645.50, up 20.50. And what we're looking at is there should be some kind of wriggle jiggle or whatever you want to call it, and then we should have a little pop to the upside, and we'll see what happens. Now, as I'm looking at this, I want to just run through the numbers as quickly as possible so we can go to our first caller. And I've got a lot of emails, and it's not Technical Friday, so we'll try to get to as many calls that you give. This is leg C in the Dow. We're at 24,000, just went right through 24,000 if it was nothing. I said there could be a resistance level at the 2390, 23,990, right through in leg C. Now, reason why I mentioned November is that tomorrow starts December. If I'm correct about, unless there's really bad news and you just smash to the downside today, by the end of the close, we're actually down 150 points from being up 234, or at least into tomorrow we go down, then maybe we'll abort at an all-time high. It is so rare to make a peak C in the daily at an all-time high in any stock or index. It does happen, but rarely. Okay, now, so the Dow has gapped up so many times, we're going to fill quite a bunch of these gaps at some point. Maybe it's in December, we'll see. But some of them will be filled. Meantime, that's really strong action. The S&P, now I want to bring this in right away. S&P is in a daily leg C. I'm calling it a C now. It says E/C, but it really should be C because the MACD and stochastic are very strong. That says that in December, you should make a new high. That means that if I take this away, look at the December charts. The December charts are still going to be in the same leg if there's even by 1 penny a new high anytime in the whole of December, let alone tomorrow. And that extends leg D in the S&P, and it extends leg in the monthly chart of the Dow, this will be leg E. In the QQQ series, which is stalling, the hint that we're starting to bump into resistance, and then we'll have to use the rotation aspect to keep going. 155.04 up $1.18 in the QQQ NDX 100 Power Shares Trust Series, filling in some of the from the low. We're touching the 9-period moving average, smashed to the downside yesterday. Technicals are still pretty weak, and the weekly chart is in E/C, and monthly chart is only in leg C. Still very powerful monthly chart. Let's go on to the IWM. The IWM wasn't leading, then it was leading, and now it's kind of in staying with the leadership position. It's up 61 at up 0.41, but the Dow is actually taken over by being up 0.99. Dow, of course, has financials, and the financials are doing very well. So IWM is still very bullish. It says any very sharp decline to the downside should still be contained within the weekly chart as being in leg B and then maybe peak B. Now I want to go to gold. Let's just do that quickly. You got gold down 9. Gold made a peak F top. I'm going to be discussing all of these techniques that we're looking at right now in my webinar a week from tomorrow. There's really not much time to sign up because this is an educational thing. Yes, it has to do with Chapman wave notation, but it really has to do with chart patterns. A whole day you get with a Tiger bonus that you can get if you buy Tiger points. I mean, this could be something that would cost you no more than one little mistake in the market. So I'm looking at this and I'm saying, I've already been working diligently. I've already started working on the webinar. I love to have the structure so that people can study it and go back to it. And it covers so many things, the patterns, the couple V-shape pattern, the arch or inverted V-shape, the straight line moves, time sequences, left side, right side, Chapman wave inside wedge, Chapman wave inside track, interlocking time frames. 120-minute can lead to the daily can lead to the weekly. I mean, I'll show you in a short while that we've got positions now in my Traders Corner for my opening call subscribers that have gone since some of them since August. They've just moved from the daily to the weekly, and now they're starting to work in the monthly charts like a General Motors. All right, let's go on. So gold is pulling back, silver's pulling back. I want you to look at crude oil. It was up, and now it's down. It's down 21 cents. So the commodity index is held well. We'll see whether crude oil is going to make a high-level consolidation or break, and it needs to break above the high that was made back in June of 2016, continuous contract 60.28. If you look at USO, probably that's the better one to look at. That will be that USO, which is United States Oil Fund, was pushed and closed sharply above 1245. The high that was made just recently last week was 1179. And so far, it's holding quite well. We'll see what happens after this. Let's go on. We want to look at the TLT. TLT is pulling back a little bit, holding the 200-period moving average. So it's not giving us all that many in terms of signs, but it did fail at 127.29 to go to a leg C to the upside. I'm going to be watching this very, very closely over the coming 4 to 5 sessions. Now, I want to also talk about, I've done that. I've done the bonds, TLT, crude oil. Oh, I think I'll finish most of what I want to look at. We'll be right back, and we'll be going to Sue in Maryland. We'll be looking at SPI and Caterpillar. Oh, two good ones. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's up 254, S&P's up 22.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank EverBank is a member, FDIC, and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up to 60. I mean, this is we rarely see this sort of thing. This is the once in every big cycle. And one of the things that I need to just talk about just very briefly is just the goal is Bitcoin down today. The one that I'm looking at is Bitcoin Investment Trust. I don't for some reason I haven't been able to find the actual Bitcoin contract, but here it is, peak C. It should make a D. But the fact that we've got this other medium is going to, I'll talk about that tomorrow in Technical Friday, where someone will remind me. This is really important because this is what creates the bubble. All right, we're going to Sue. Hi, Sue. How are you?
Thank you so much, Mr. Basil, for taking my call.
My pleasure.
Would you please help me look at SBI?
Okay, so SBI is Western, what do we have? Western Asset, I during the break, I looked at, I forgot to look at the, what it is. Western Asset Intermediate. Western Asset what do they do?
I think a hand, the coding, I guess. I don't know.
All right, well, did you have any position in this?
Oh, no.
Wow. It's a very interesting chart. The fact that it made in the monthly chart a lower low in this arch formation, and then because that's what happened in the weekly chart, and the candle that's forming in the weekly chart says to me, right here at 9:35, it's really important. Just purely, it's funny that you bring this up because I'm going to try to bring this across. This is a chart that I'm in my preparation for my webinar a week from today, where I'm going to be looking at all sorts of things, the chart formations. Here's a chart that looks very much like the one that you just showed me. And I discuss this in detail because it has to do with what happens in the arch.
I'm talking about this is much a long one. S as a Harry, B as a boy, I as an item.
So, but that's an S for Sam.
No, this is S for home. Yeah. Different one, I'm sorry.
Okay, wait, just tell me the first symbol again.
A hand. An S as a hand. S like a home.
Oh. HBI.
Yeah, and B as a boy, I as item, correct.
Okay, HBI. Oh, Haynes brand. Okay. Oh,
Yeah.
different chart. Oh, okay. Yeah, this is, hey, it's funny because this one has the same arch formation in the monthly chart and almost the same candle, but it's a very different pattern. All right, this is, so Haynes brand, is this, which brand, Haynes brand, is this the Haynes brand, the underwear and all that?
Yes.
Oh, okay, good. All right. So I like it very much. I like it right here, and I like it for two reasons. I like it because it's now in the retail business. It's in the apparel, and that's starting to move nice. Do you have a position? Did you say no?
No, I didn't have one. I'm going to get it in today. I thought.
So
you know,
let me just explain. Let me explain two things that are really important within the pattern that I'm looking at now. Haynes had, I don't know whether it was a news report, it was a general pullback in the market, but on the 2nd of November, it gapped down and the high was 21.22. The previous day, the high was 21.68. Now, I have a way of looking at gaps that over the years, I've found that when you get this kind of rectangle to a bowl-shaped formation, like a cup formation, and it takes out completely that left side gap that was a very serious gap, and it kept going down. That's very positive. So here's what I'm saying. At 20.94, I'm going to recommend you start a small position. You can't get a biggest position as you would have if you called me maybe 2 days ago when it was at about $19.78. It's only about $1 higher, but the pattern says it's already in leg C, and the weekly chart was so ugly that it's got a lot of work to do. But I'm going to recommend that you take a position here at 20.94, not a big position, just you start a position. But what I would also say to you is I would add to that position, if there's a pullback, it's at 20.94. I'd add another small position at 20.51. And the second position has to have a very tight stop of like 20.19. So that says you're getting in. If it pulls back a little bit, you might add a little bit more. And here's the other thing. If it actually goes into the gap, which is above $21.22, that's a very positive thing. So yes, I'm going to say I like it. I like it more shorter term than longer term, but at least for a few weeks, I think that this could move higher. And if you enter here, but you can't get a big position, you're going to enter here because you really have to wait about a week to see, does it get into the 22s? And if it gets into the 22s, I would say that's really good action. So HBI trading at 20.98, up 67 cents. Not the best entry because it's already in C, but the MACD is moving up. The daily stochastic is improving. The weekly chart needs a lot of work, but I think it's improving enough to say, yep, it's a position you can get into. And if through the whole of December, this thing actually doesn't take out the low of $18.90, but instead is able to push to the 22.50, 23.20 area, it'll say, hey, this is much better action. Finally, it's turning the corner. So that's the way I'm looking at it. Hope that helps you. And just one other thing in Caterpillar.
Yeah, Caterpillar, please, yes.
Do you have a position in Caterpillar?
No. I tried to get in because...
But it went away too quickly, huh?
Yeah.
Yeah. You know, I like it, but I think it's at 139.91. I got a feeling it's going to have 140.44 was the all-time high. The pattern I'm looking at says, you know what, it could go a little higher. It could go maybe 2 points higher, but then I think it's going to bump into a lot of resistance. So I like it very much, but risk-reward now is a little too risky. I would prefer to wait 3, 4, 5, 6 weeks. If it can come back into the 134, 132 area, give me a call. We'll look at it again.
Oh my. Okay. Thank you so much, Basil. I really appreciate that. Thanks a lot.
Very good. Good. Two good stocks to look at. Thank you very much. I appreciate that, Sue. Good.
Thank
So,
you.
folks, let's go to the other questions I had. XLF. Let's just do that. I always get XLF is in a leg C. So in the Chapman methodology, you've got the financials, the XLF, leg C. It should go to a D. That has to take you into next week at the earliest. You've got what did I say? You got the Dow leg C. You got the S&P leg C. We're going to go to KRE, question in the dead. Also in a leg C. Oh, no. Yes. Yeah, this is only B. In a leg B. And a leg C. So the KRA, this is the KRE, trading at 60.22, up 37 cents. This is the Spider SB regional banks. Actually has a stronger pattern right now than the XLF. Didn't before, but now it is. So regionals are doing well, and I think that's why the IWM, which I think has more regionals, the Russell 2000, is doing nicely. I'll be right back. Basil Chapman, Tiger Mitch this hour. Dow's up 270.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, so let's just run through the questions again. So KRE, yes, I think that this is acting well. And if you haven't got any at all, you could start a position here because this is, I would have said in the 58s would be better. But if this is B and it has the potential to go to the if this is only B, it has the potential really to go to the 62s or higher. I think a point and a half, it doesn't make any difference right now. The better price would, of course, be about a point and a half lower, but starting a new position right here is good. Now, I had a question about the IYT. The IYT is, in fact, the transportation index up 3.89 at 185.70. Leg C again. Look how many C's. It says that no matter what happens with the news about the bill, even if there's a sudden disappointment, we should see somehow or other, even if it's just fractional new highs after peak C, we should see a leg D sometime next week. Now, this is going to be very interesting. So, leg D now in the weekly chart of the transports. I had a question about some individual stocks. Let's look at CSX, they also in leg C. Look, I mean, it just goes on and on. CSX, the one that I was asked about that we have for the subscribers, the opening call, and I did a whole study on showing exactly why we wanted to get in and what we were looking at. It is trading right now. We're in the 114s. UPS. It did it. So it looks like it might be doing it in a quicker time frame. So we have a long at 114.49. It's trading at 121.15. Target was the left side cup formation. This is what I'm going to be teaching in my webinar coming up a week on Friday. How we use the MACD, how we use the stochastic, how we look at divergences, how we look at anything that has a potential for a cup formation, how the 9-period moving average can move. Even when we, so this is leg B, but it's gray B. It doesn't become blue, in other words, a major buy mode until it really breaks above the 121.75. Even then it becomes, in this case, say B/E/B. I have to reintroduce the D because it didn't go lower than the previous low that started the buy mode. So that's very positive. Also, the weekly chart, you have such a quick V-shaped pattern going back to the previous high. Says be careful because you're going to have to spiral right through the 121.75 level to be able to avoid that double top formation that occurs on a very quick down and up move. But the monthly chart is really improving. This UPS, United Parcel Service, shipping packages, etc. And my contention was before it broke out and people started talking about new fees and all that, was that it held that 9-period exponential moving average. We went in on the 28th of November. It had closed the day before at 114.54. I said to get it underneath 114.50. It went just a tad lower. It actually gapped up. Then it came down as if to say, hey, okay, come aboard, all aboard, gone. And look at it, rocket ship up at 121.32. We'll see how that can work out. So these are the techniques I'll be teaching. And this is live action that you're looking at right now. And I want to just show you that the manner in which the IYT, which was one of the weaker indices, one of the reasons why I felt comfortable going short the Dow for a short-term short position a few weeks ago, was because look how badly it was. And then it had this little doji candle. Oh, doji candle. I must use that for, where's my study? IYT doji low. I'm trying to find all the examples that can be used in a week's time for all the different, and I suspect that by next week we will have some kind of a shorter term sell signal. We've been watching this very closely. So IYT, very strong, all-time high. We went from lagging to leading, and this is really good. In leg C, this is the daily. Next question I had was XLF. Well, this XLF, I want to cry because we had Bank of America, took 10%, thought that was good, tried to get back in, was just too clever. I don't like being too clever. So this is, the daily is leg C. MACD and stochastic go very sharply up. I don't actually like the speed with the technicals have moved to the upside, but the price is doing beautifully. And it's in leg E in the monthly chart. Ooh, a lot of E's and D's, huh? In the monthly chart, and it's recycled in the, I don't know if I should recount that. Oh, it's an F/B in the weekly chart. That's all I can do. And so far, everything's positive, so I don't really have to think about whether it's an F or a D. It's just acting real well and should go a little bit higher. VNOM, yes, you had brought this up in the den. Coda said, yep, oh, there it is. Now it's got a leg D. This is, what the heck is it? Viper Energy. Oh, right. It's in leg D in the daily, right here. It really looks like that's a D, and this is a brand new C. But I'm going to put D. It's no problem. You have to be strict. And a D in the weekly, and leg C, cup formation in the monthly chart. Yeah, this is still acting well. It should be getting to some kind of resistance at 20.95 to just under, maybe 21.20, just in that area. I'm suspecting it's going to bump into a lot of resistance. So next question was XOM. Let's go to XOM. I haven't looked at that for a little while. Oh, very strong move. Leg B. This is a gray B because it's under the previous high, but very strong. Weekly chart needs a lot of work. It needs to get, it's at 83.16, up to 89 cents. It really needs to break and hold in the 84.50s or higher, and then you're going to see Exxon. Then I would say, now it might hold steady for you. Now you know your parameters. You've got your 5% risk. If you're looking at a dividend, I'll consider it, but maybe I'll even think about it next day or two. Although I'm trying to avoid adding longs. I mean, whenever we get to 8 or 9 long positions, it's usually a tip-off that you're getting really close to some kind of a pullback. I'm not superstitious, but that sits in my craw. So that's what I'm looking at. And what we're looking at, oh, yes, a question about potash, POT, trading up. You know, I think it's nice. It's got a lot of these commodity-type stocks, the oils, the gold, etc., in their monthly charts are really not positive. I'm suspecting that the Fed is going to get the inflation that they're looking for. And when inflation comes in, it is going to be a doozy, as I mentioned in my webinar last week, the Duesenberg. It's going to be a doozy because it's going to come in like an avalanche. I don't know how they're going to control it. That's my thinking. And then you're going to have the toss-up between inflation and things that you really need, as well as some kind of a deflation in the whole commoditization of all electricals, etc. And that might impact Apple and others because all the countries are trying to make these goods and they're trying to get into the products that we want. So potash acting very nicely. What was the other question? Vale, V-A-L-E, Vale. Now, I'd say that Vale was looking quite nice the other day. It was going to be, I just said that to my subscribers just to show that Holly Davidson and Vale, which is a Brazilian iron ore producer, was showing to show the diversity of what was working the other day. Didn't want to have a position in it because it was getting so close to the left side, right side price time match of the high of the 7th of September at 1172. So it's pulled back today. It's down 33 cents at 1069. Now, potash was looking very good. I'm thinking Vale is just stuck at the moment in a sideways trading band. I'll try to get to it as soon as we get back. Be right back. Dow's up 299.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. So Vail is trading at $10.70, down 32 cents. It was just a little deeper than I would have liked to see the candle today, because I have a rule of thumb that in a cup formation, when you retest the top, if there's a failure, you do not want to go down more than 25 to 40% from the previous high. This is really close, getting close to 50%. Because it makes it much harder. But if you look at the cup formation, left side, right side, price time match, and it sort of failed at the peak B 3 days ago at 1142. If you look at the weekly chart, it's just repeating the same thing. And funnily enough, the monthly chart is doing it even on a bigger scale. It's so I've never seen this. I must take a note of this. So the daily has a cup with a little handle. The weekly has a huge deep cup with a deep handle. And then the monthly has a cup with a small handle and another cup with a small handle. They're getting smaller and smaller. I'm going to say I would, if you're along the question in the den, yes, I would hold Vail. I don't think I would add to it now. What I would look at is it needs to, at 1070, it's really holding in a range. I don't think I would, I don't see it breaking out to 950, which would be very bad. So I think I'm just going to say, let's look at it in another, I'll look at it again tomorrow and remind me again on Monday. We'll look at it because this is an important stock. It moves around very nicely once it gets going. All I can say is that if it finally breaks, and it looks like it's going to do that, if it finally breaks above $12 and $11.95, $2 higher than where it is, that 1239 monthly 200 period exponential moving average is going to be beckoning, and it's going to be beckoning loud and clear. So I like it. I don't want to add to it now. Where would I add to it? If by Monday, today's Thursday, so you've got Friday, give it Monday, and then there's the whole thing with what happens with the bill, etc. I'm still expecting a leg D. Let's say that occurs on maybe Tuesday or so. If on Tuesday to Wednesday of next week, it hasn't taken out 1060, or it hasn't closed below that, but in fact it's holding okay here, and it's managed to squeak to $11.13 to $11.17, I'm going to say that's where I would add another small position, and that one has to have a 20-cent tighter stop. Why? Because it's starting the part of the cup formation, the right side rise of the cup formation, going to a leg C. It's still a gray leg B, a gray peak B. It needs to get above 1172 to really show strength. So yes, I like it. I just don't like the action today. I don't want to see it go much deeper. If it goes much deeper, you're just going to have to wait a little longer, but it's making these smaller and smaller cups in the monthly and suggesting at some point it's going to try to take out the 1190s to go to 12. Once it's in the 12s, that's really a very good sign. Hope that helps you. Thank you for asking the question. Next thing is, this is a very interesting. The VIX index. Let me show you something here. The VIX, I had a couple of questions about the VIX. The VIX is actually rallying strongly. It's up $1.08 at 1178. Now, let's see. The stock market, the Dow, is up at all-time, not just all-time record highs. It's made a new millennium. 24,000 looked like, I didn't even know about 20 millenniums anymore. I just go right through them like we used to go through 100-point moves, and it's at 24,300 right now. The VIX index should have been down 1.5 points, but it is trading at $11.78. Why? Here's why. Look at the SMHs. The SMHs up $1.25, up a whole 1.25%. That is better than the S&P. No. Wait a minute. The all-time high was that 105.83 two-bar Chapman wave reversal, parallel highs, which we just missed shorting. Anyway, and it hasn't had shown any strength. And the question I had, a couple of emails came in last night. Do you think that is now? Because of what I teach, because my newsletter is really a teaching tool all the time, I explain what we're looking at. I had a number of people. I was actually surprised at how many people said, thank you. I had a stock we just missed the other day shorting in the report, but because I did the homework and others did the homework, some people did short ADI and some people even had puts on them and did very nicely. That was ADI is analog devices because it made a rogue wave peak G. Oh, rogue wave peak G. ADI rogue wave, all for my course, peak G. And then it pulled back very sharply from the 93.99 area to yesterday's low of 83.90. And some people did go short the SMHs from that peak D high, which is exactly what I normally would do. But this time I said, the market looks like it wants to go higher. I don't know how the SMHs can move higher, but they could. So I stepped aside briefly, and then we missed a huge move from 105s down to the 99s. Kind of what we've been looking for all the time. So it's 6 points. We of course, because of the move in UPS, that's more than made up for that. 114, it's made up 7 points, in fact, to the upside. But now this is what's really important. Within the context of the markets, this rotation. Going to a question I had, Macy's. Yeah, look at this. Macy's goes from the 1741 low that was made on the 7th of November, and it's up 7 points. It's at 2466 in a very short period of time. That's this whole rotational thing. That's a major bull market. Bull markets do that. Instead of everything coming down at the same time, they rotate. And the fund managers say, oh, it's not working. Yeah, let's go into, and then they look for what was the weakest group. The one weakest group that isn't exactly participating as well as it should, it's actually doing nicely, is the IBB. It's up 4.60 at 315. We did have a long, we did take a little profits. We're long at 308.19, took a profit, a small profit. And now it's moving up and it's going right into this repellent zone. So this is going to be, see that? See this up channel, see those lines? It's just, there it is. Just a little, yeah, it's right on the uptrend resistance line, but it is improving technically. So this is very important. So this, you've got the rotation into other areas. And that says that something like gold, look at the GLD. The GLD is pulling back sharply. Look at gold itself. Peak F top up in the 1303s, and then kapop, it goes down to 1270, 1276. So it just says it's not ready, but it's not really that it's not ready. It's because there's a rotation into other areas, and that's really important. It's one of the reasons for the portfolio that we have for subscribers. We're in a lot of different things. I don't really have a choice, but I have to show some things because how else are you supposed to know? What I'm doing, each one of our services is doing. So, we've had General Motors for a long time. It's trading down today at 40. We had a quick trade. We got out because of that leg D, went to a peak D and pulled back. But we're in the 34s, and it's trading at 43s. It hit 45. It actually hit 40. What was that high? 46.76 back in late October. And that's the one that goes from the daily. It actually sold for the 120, but it went to the daily, the weekly, and it's improved. Look at that monthly and a leg D. It will make a peak D if today there isn't a new high, which there won't be a new recovery high. But that would be a peak D in the month. So these are very important aspects that you want to learn. How time frames work. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Quick question, will I just review some things? Yeah, for my opening for subscribers, the webinar I had a week ago on Monday night, this was looking at the big picture for 2017, the things that we discussed. We started position, we had positions, we started a couple of positions immediately afterwards. One of them was AKS, which is AK Steel, and we got in at 466 on that sharp pullback right over there. It hit 498 today, double top at that peak B. It needs to break through. It's having a tough time. It's not it's a pattern that I liked as a constructive, as a following up on steels, and the way that technicals were working. I'm really looking for percentages on this as a shorter term trade. I just can't see it climbing all the way back, that big red candle, but it's a nice percentage move, certainly a nice percentage move. And yep, we've still got, and I say the new ones on the UPS we got, wow, just broke out the 121.75 level. It is screaming to the upside, up another 2.92 and we were in at 114 to 121. So just to review, yes. So a quick question about Boeing. Boeing is up 492 at 272. Leg D, I've got it. Leg E in the weekly and leg E in the monthly. I'll talk about it tomorrow. I'll talk about the bigger picture going into first and second week of December. Tomorrow when I do my more intensive Chapman wave studies in my Tiger Technicians Hour at noon. Another question was MS. I don't know if I updated MS, which is Morgan Stanley. This is a brand new leg, B to the upside, and the daily leg, D in the weekly. So yeah, these the banks are going to be beneficiaries in many ways. Here's a couple of things that I need to talk about. Within the patterns that we look at, I'm going to be teaching how you can use the shorter time frames to be able to look at the longer time frames. That's how we're treating the Dow. For instance, the Dow in a more intermediate term position, in a position for those subscribers who got in back at the 22,290. Now we've added another position, and this one I think is going to be shorter lived, but in the meantime it's done extremely well, and that makes the 120-minute chart led to the daily. Dailies hopefully leading to the weekly. Weekly will lead to the monthly. That's how you look at the picture, and that's what I'll be teaching a week from tomorrow. Check out front page and the Tiger Dollars. How can you go wrong? Stay tuned for Steve Rhodes. I'll be back later on with Tom.
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.